BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
I love it. Guys, we're really going to the moon today. If you haven't already seen our saviors of the market, the head chefs of the 2 biggest digital asset treasury companies, this seems coordinated. I'm not a conspiracy theorist here, but the fact that, everyone was running for the hills saying that Saylor and Tom Lee were running out of cash, they were getting ready to sell. Michael Saylor was like, hey, if we end up falling under MNAV, we're going to end up, selling Bitcoin derivatives in order to, buy back the share price. They went and just bought $1 billion of Bitcoin today. You got to think that is why we're green. But guys, happy Monday. Looks like it's going to be the start of a new week. We were up. Bitcoin's back under 90. So who really knows what's going on in the market? But if you are a quantum secure monetary owner, you're happy. Zcash up like 20%. So that's doing quite well. Hope everyone had a good weekend. Personally was taking it easy, enjoying some time outside. And now it's time to lock in and have another great week ahead of the holidays. We've got a great show for you guys today. We've got a couple of Bitcoin projects. We're going to be talking to Meanwhile. This one's pretty cool. They're doing life insurance on Bitcoin. Capitalize on Bitcoin's growth and minimize your taxes with the future of wealth preservation. This is pretty cool. So we're going to be hearing from Danny. And I think we're going to start to see a lot more of this. And generally, what makes this such a productive and useful market is that I think you guys also agree, is that Bitcoin is the most pristine collateral that exists today. What we're going to do to extend the value proposition of Bitcoin beyond just sending it back and forth. No one's going to use it to buy coffee with Bitcoin. We've kind of proven that. I used cash to buy, or a US dollar equivalent to buy my coffee this morning. So no one's going to be using Bitcoin. If you still believe that, go buy a bag of Bitcoin Cash and sit down and shut up. The reality is that we're using US dollar stable coins. We're using US dollar equivalents. That's how we're going to be using. That's how we're going to be buying our coffee and making most of our transactional purchases throughout the day. Bitcoin is a store of value, and it is a collateral asset that we can use as a reserve asset for the foundation of a lot more markets and a lot more forms of the economy. Life insurance and insurance markets are a very substantial part of that. And so we've got, meanwhile, doing life insurance on Bitcoin, and we're going to get Danny in just a moment. And so afterwards, we've got McBrennan from Project Zero, and then we've got Adam from Contour Network. And so, guys, we've got a great show. It's just me. Andy's laid up on a beach somewhere celebrating Art Basel in Miami, trying to get a little bit more inspiration and taste going in his life because he's been a bit zoomed in as of late. I don't know if you guys noticed, I hung up inspired by Art Basel in Miami. One of my favorites, Nighthawks by Edward Hopper. Got this print at the Chicago Institute of Art when I was there over the summer, and I'm particularly enjoying it, adding it to the collection. And so, guys, zoom out. Things are happening. Apparently, Trump is going to make a economic announcement today. We're going to bring you guys everything that is most important and top of mind in the crypto markets and broadly as part of our show today. So let's do a quick standby as we bring up our first guest. Do a quick commercial break. We'll be right back. Don't go anywhere. This is Rollup TV. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its Rio upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its...
All right. We are here with Danny Danny, welcome to the show. It's your first time on, and we are big believers in Bitcoin capital markets. Bitcoin native life insurance is what we're talking about today. It's your first time on the show. Give us a little bit of where you're at, how's it going, and how you ended up here. What's the origin story?
For sure, yeah. Appreciate you having me on, Robbie. Big fan of the show. So pleased to be here and love talking Bitcoin capital markets. So it sounds like we're in the right spot. So I work at a company called Meanwhile. After the two co-founders and our chief insurance officer, I'm the fourth. I've been around the fourth longest. So pre go to market, helped build out go to market for our first product. But what we are as a company is we're the first licensed and regulated life insurance carrier in the world that uses Bitcoin as our currency. So we're a Bitcoin denominated life insurance carrier. So that actually means like our balance sheet, our income statement, all of our externally audited financials are stated in Bitcoin. You can imagine how ridiculous our financials look. They're stated to Satoshi. So 9 decimal points for each line item, which is a little bit overwhelming to read for some, but we think is pretty cool. So I help lead revenue at Meanwhile. We've been at market with our flagship product, which is whole life insurance denominated in Bitcoin. We've been at market with that product for over 2 years now, and we're working to build out a few new products that we're excited about, ranging from retail focused to institutional focused.
Epic. Wow. Awesome. Okay. So the life insurance market in general, right, is basically we're paying premiums. And, in the case of an unfortunate event in which life insurance would be paid out, you would get paid out. In this case, are we paying the premiums in Bitcoin? Are we getting the output in Bitcoin? Walk us through like what a life insurance deal would look like from someone who would, be taking on one of these policies.
Yeah. So again, our carrier exclusively touches Bitcoin as our currency. We don't even call it the price of Bitcoin. We call it the exchange rate of Bitcoin. So everything in our product, similar to the carrier itself, is exclusively denominated in Bitcoin. So for our policyholders, they're buying whole life insurance. Some countries call it permanent life insurance, but that's different than term. So term is you buy like 10, 20, 30 years worth of coverage. If you outlive that, then you don't get any payout. Okay. Whereas whole life or permanent life is no matter how long you live, whenever you pass away, you will get a payout, which is more than what you pay in. So with our policy, our policyholders pay premiums for 10 years in Bitcoin, one payment per year. So that they pay 10 total, they pay 1 Bitcoin per year for 10 years, or if they pay 1 total, they pay 1/10 of a Bitcoin per year for 10 years. And then whenever they die, they'll receive some number higher than that. And that calculation is dependent on their medical underwriting. So the younger and healthier you are, the longer we expect you to live. So the better that multiple is, frankly. But it's all in Bitcoin. So an example of a policy might be, I agree to pay 10 Bitcoins of premium payments over 10 years. And then whenever I die, my beneficiaries will receive 15 or 20 Bitcoins at that time. And the beauty of this is not only are you passing on more Bitcoin, but the reason we started with whole life insurance is that people buy whole life insurance not necessarily for that payout, but because whole life insurance is assigned these amazing tax benefits by the IRS. So people are incentivized to buy whole life insurance because of those tax advantages. Because governments and regulators hate like the widows and orphan story. They don't want people to be poor or left out to dry in the horrible event that like the primary breadwinner gets hit by a bus. Mm-hmm. So there are like 3 very basic benefits of whole life insurance, which is just true of our product, or it's true if you buy whole life insurance from Northwestern Mutual in dollars. Mm-hmm. I always use Northwestern as an example because they're one of our largest investors. But if you buy whole life insurance in dollars, or in our case in Bitcoin, you get a guaranteed payout whenever you die. So you could buy $1 million worth of coverage, or you could buy 10 Bitcoins worth of coverage in our case. That payout pays out to your beneficiaries income and capital gains tax-free. So there's a tax benefit there. The second is the policy grows over the lifetime of the insured. And those investment returns, that growth compounds tax-free. So you might buy dollar denominated insurance that grows 4.5%. That's like 4.5% tax-free return. Mm-hmm. Or in our case, you get 2% Bitcoin denominated growth. So it's like you're getting 2% Bitcoin yields that compounds tax-free over your lifetime. And then the third benefit is you can use whole life insurance as an asset as collateral to borrow against during your life. And those loans, those policy loans, are tax-free. So people buy whole life insurance to essentially borrow from themselves as opposed to going to the bank and borrowing from the bank. And you typically get better interest rates, and you get the flexibility of choosing to either never repay the loan, because whenever you die, the payout of your life insurance policy covers the outstanding loan balance. Or in our case, because it's in Bitcoin, if the price of Bitcoin is volatile, you can repay your loan if the price of Bitcoin drops for cheaper than maybe you took the Bitcoin loan out to begin with. So most people are buying this product from us because they believe the price of Bitcoin will be higher in the future than it is today. And they want to be able to live off of that Bitcoin wealth tax efficiently by borrowing against their policy to sell Bitcoin tax-free.
Yeah. Wow. Okay. This makes sense for all of the reasons that you mentioned. You know, the tax advantages. Not only is there a custody issue with Bitcoin, and for a long, long time, it was like, how do we pass on? Do we, put this seed phrase in a safe, bury it underground, put up some treasure map and pass that along to our kids and have them go on this treasure hunt when someone passes? No, now we have custody solutions. So at least, we're not digging, holes in the backyard anymore. But this is also a way to do that passing on to beneficiaries in the most tax advantageous way. And so you mentioned the IRS looks favorably on these whole life insurance policies. And so, my understanding is like there's inheritance taxes, there's estate taxes. You're saying if someone takes out one of these life insurance policies, they don't have to worry about any of those. No inheritance tax, no estate taxes.
Caveat there. So whole life insurance, the payout of the policy pays out income and capital gains tax-free. The growth of the policy over the lifetime of the insured compounds tax-free. Now, if an individual owns a whole life insurance policy, when they die, that payout might settle into their estate. So it could be subject to that inheritance tax or that estate tax, but there are ways to structure ownership to work around that. So rather than Danny Bear owning a whole life insurance policy, the Danny Bear irrevocable trust could own a life insurance policy on Danny's life. And that way, when Danny dies, the payout, instead of going to Danny, goes to the irrevocable trust, which then settles outside of my estate and therefore avoids that estate tax. So that's actually a really important point around like structuring of ownership of whole life insurance. And this is, again, true of dollars or Bitcoin.
Even outside of the Bitcoin crypto realm, this is just thinking ahead of being very thoughtful about how someone is structuring their portfolio so that in these inevitable cases, we take things the most tax advantageous way.
Exactly. So really one of the first questions we ask is your primary use case that you want to live off of your Bitcoin tax efficiently? Because if that's the case, then you just own it yourself, borrow as much out against your policy over your lifetime. And the reason that people do that, and maybe I'll spend 5 seconds on this, or more than 5 seconds, or a little bit of time on this. So the tax-free policy loan, again, the collateral of that loan is your life insurance policy. And that, in our case, is denominated in Bitcoin. So your life insurance policy might be worth 1 or 5 or 10 or 30 or 50 Bitcoins. That is collateral. We allow people after 2 years to borrow up to 90% of that value, a 90% loan to value ratio. We charge 3% interest rate. And that loan itself is not in dollars, it's in Bitcoin. So if my policy is worth 10 Bitcoin at some point in time, I can borrow up to 9 Bitcoin out. But the reason that's important is because those 9 Bitcoin, when they hit my wallet, get assigned a cost basis of whatever the price of Bitcoin is at that time. So if Bitcoin goes to $1 million in 10 years, I could borrow 9 Bitcoin out. In this example, I could sell those 9 Bitcoin for $9 million of cash, and I would owe no taxes on that sale because I'm selling them at cost.
I see.
My loan is 9 Bitcoin against 10 Bitcoin of collateral, not $9 million. So if the price of Bitcoin drops, I'm never at risk of getting margin called.
Right.
And in fact, if the price of Bitcoin drops, I would just buy cheaper Bitcoin and use those cheaper Bitcoins to repay my loan.
Right.
So that's important. And then if your primary use case of this policy is to do that, then you just own it in your own name, because your goal is by the time you die for your loan balance to be equal to the payout of the policy, so that the payout, the death benefit covers your outstanding loan balance, and then you're effectively passing on nothing because
Right.
you're not worried about passing it on. You're worried about living off your Bitcoin wealth during your lifetime.
Yeah.
Now, if you have cash flows and you're not worried about living off your Bitcoin wealth and you simply want to pass it on to the next generation most tax efficiently, then you would own it via a trust or some other structure. And that way it would avoid the estate tax when you die.
Are there outside of the Bitcoin realm, which I know is their specialty, but just zooming out a little bit, is there any other like portfolio management sort of things that you think are sort of flying under the radar, for people that are sort of maybe amassing more and more wealth as, crypto continues to appreciate in price? What are some of the portfolio construction strategies that you've seen in your experience be most advantageous?
Yeah, well, I mean, it's a great question, and it's something that people, to your point, need to spend more time thinking about as the overall crypto market cap increases because people are getting more and more wealthy. I always say when I'm on the circuit talking in front of audiences that like Bitcoin itself has, let's just call it a $2 trillion, it's like $1.8 trillion market cap today. Up until a year and a half ago, 2 years ago, that was completely owned by individuals in retail. It's only been the last year or two that institutions have gotten into the game. So that's $1.8 trillion that has been of wealth that has been created for individuals who maybe like bought it as a flyer back in 2015, forgot they owned it. Now they remembered and they're like, oh my gosh, I've got millions of dollars in this asset. I have no idea what to do with it. So what we're seeing is as the Bitcoin space matures, so too are the policy, or not the policies, are the owners of Bitcoin.
Right.
Maybe if someone 10 years ago when they were 25 bought some Bitcoin, they're now 35. They now are married. They have families. They're thinking about legacy and planning for what is beyond their life. And that's where a lot of the structuring and planning comes into place. Now, we touched a little bit on irrevocable trusts. If you're concerned about the estate tax, now, if you're an individual, it's like $14 million of lifetime exemption. So if you don't have $14 million, you don't really need to worry about it. If you're married, that doubles because you and your spouse combine your $14 million of exemption. But if it is something that you're concerned about, irrevocable trusts are an effective way to pass on wealth tax efficiently, intergenerationally. And I would just say the one thing that we talk about with our product is if I own Bitcoin in my name and I die, my beneficiaries receive that Bitcoin and it gets a stepped up cost basis, which is great from a tax perspective because if they sold it, they wouldn't owe as much in capital gains tax.
Right. But if that wasn't the case and they sold it, they would owe capital gains tax from way when the cost basis was originally calculated.
Exactly right. And so, Robbie, the important piece here is that first step that people are taking to plan, if they have significant wealth in this asset, is many of them are moving Bitcoin into an irrevocable trust to plan for that estate or that inheritance tax.
Right.
But if they stop there, if they just move Bitcoin from their name or their individual or their revocable trust to an irrevocable trust, when they pass away, because that Bitcoin is no longer in their estate, it no longer gets a stepped up cost basis. So your heirs the beneficiaries of that trust will receive it with the low cost basis that you acquired it for. Unless you don't stop there and you take it a step farther.
Right.
And you have the trust buy the life insurance policy for meanwhile, use those Bitcoins to pay the premium. So when you die, the life insurance policy pays out brand new Bitcoin to the trust. And therefore your beneficiaries
assume the greater cost basis.
They get more Bitcoin at a higher cost basis. So they benefit in both those ways.
Awesome. Okay. That really helps paint the picture of the tax advantages of not only moving into an irrevocable trust, which sounds like it makes sense around that 15 million mark or maybe that 30 million mark if you're married. And then beyond that, buying life insurance policy assumes a greater cost basis when you ultimately pass on that Bitcoin. That makes total sense. The next question is earning more Bitcoin, right? So not, if you put 10 into the policy, you're not just getting back 10 at a greater cost basis, you're getting 10 plus whatever the yield on that Bitcoin is over time. The question when it comes to these things, it's the same question that it always has been, which is where does the yield come from? Are you guys selling options? Or like where, that incremental, juice in Bitcoin that comes over the 5, 10, 15, 20 years, where does that additional Bitcoin come from?
Might be surprising you, Robbie. You're not the first person to ask me this. So
Always the
hopefully-
question, man.
hopefully
Where does the yield come from?
Yeah. So in our case, the yield primarily comes from tax arbitrage. So we actually have a product that we've structured that is specifically tailored for miners, hedge funds, traders, anyone in the world who wants to sell Bitcoin in order to create more Bitcoin. So if you're a trader, you want to sell Bitcoin when you think it's low, or sorry, you want to sell Bitcoin when you think it's high so that you can buy more when it's low. If you're a hedge fund, you do the same thing. If you're a miner, you have dollar denominated operating expenses, but you cash flow in Bitcoin. So you generate Bitcoin, but when you need to like pay for your power, buy new machines, pay your payroll, whatever it is, pay your legal fees or advisory fees, those are in dollars. So you're selling Bitcoin to make those expenses. Now, if you have low cost basis Bitcoin and you're a publicly traded miner or a private miner, you don't want to sell that low cost basis Bitcoin to pay your payroll because you're incurring a 21% corporate capital gains tax hit every time you do that. So what Meanwhile has done, and what we're able to do as a life insurance carrier, is we've structured a product where we essentially swap Bitcoin with these miners or these hedge fund LPs or these traders, so that instead of disposing of low cost basis Bitcoin, they can dispose of new cost basis Bitcoin tax-free. And they're willing to pay us 3.5% to do that, as opposed to paying 21% corporate capital gains tax rate. So in this example, and I'll just walk you through it very briefly, is let's say Robbie Mining LLC has 100 Bitcoin that you acquired for $0. You could
from mining it, right? So I purchased the hardware, I purchased the equipment. I've been mining it for 2-3 years. I've been able to mine 100 Bitcoin over 4 years,
or for 10 years or 15 years or however long. You have a bunch of Bitcoin that you had acquired at a price significantly lower than today's price.
Mm-hmm.
You don't want to sell that to pay for your power or your machines or your payroll, because you would incur 21% cap gains tax hit on that appreciation.
Mm-hmm.
So what you would do instead is you would come to Meanwhile and you would send us 100 Bitcoin, those 100 Bitcoin. We would send you 96.5 Bitcoin back. So that's
at the higher cost basis.
You would receive those 96.5 brand new Bitcoin with a brand new cost basis, so you can sell them at cost tax-free.
Mm.
So you paid us 3.5%. That's the difference between the 100 and the 96.5.
Right.
And then at the end of a year, this is a 1-year term. You can either send us 3.5 more Bitcoin to roll it for another year, or you can close out. It's structured as a repurchase agreement. You can close out the repo by sending us 96.5 new Bitcoin in exchange for 96.5 of your original low cost basis Bitcoin back. So it allows you to like leverage your low cost basis Bitcoin for funding operating expenses tax efficiently if you're a miner or you're a trader or you're a hedge fund.
Right. So I can pull a greater cost basis forward. I can use the greater cost basis here today, sell that basically tax free, cost me 3.5%. And I would forego 25 or 30%, depending on short-term, long-term cap gains. So I forego, 20 extra points of tax, pay 3.5 to you guys, pull that forward. And then when I'm ready to close that, that's not the end of the deal. I still have to pay back and get my original low cost basis Bitcoin.
Exactly. So it's structured as a repurchase agreement. And the whole reason that you're not getting taxed is because you are obligated to repurchase your original low cost basis Bitcoin back. So if you think that you can mine 110 Bitcoin over the course of a year, just using round numbers as an example, you would say, great, I'm going to send Meanwhile 100. Meanwhile is going to keep 3.5 of those as the interest rate or the expense of this deal. Meanwhile then is going to hold the other 96.5 in a segregated vault, non-rehypothecated, so that in a year's time, or if you roll it for multiple years, whenever you close out the repo, you get back the exact same 96.5 Satoshis that you sent us, so that you maintain that original cost basis. But you do this because you could say, great, I'll send Meanwhile 100, they'll send me 96.5 back, I'll sell them tax-free, I'll do all that to like mine more Bitcoin or to trade to acquire more Bitcoin, because I think that in a year I'll have 110 Bitcoin. Now, of that 100, you send 96 and a half to get your original 96 and a half back. So you've net made 10 Bitcoin, and you've done it without incurring that 20 to 30% tax hit.
What happens if, like it turns out, my data farm gets struck by lightning, or if I have a bad year trading and for some reason I can't buy back the 96 and a half original Bitcoin?
Yeah. So then we claim that, we take that as the collateral because you failed to repurchase it. And then it's just deemed as a sale.
I see.
So that's actually why, meanwhile, our business, we love this product because you've given us the interest and the collateral on day one. So we take no credit risk in this operation.
Right.
And we get a 1 year's worth of duration on the loan. So that's the primary way that we get the return. And it makes sense for all these miners and traders out there, because the alternative is either they sell their Bitcoin, pay a much higher capital gains tax rate, or they borrow dollars against their Bitcoin and they pay 12, 14%. For a lot of miners, frankly, it's like 18 to 20% interest rates on these loans. So it's just a much more cost-effective way to leverage that, what has historically been captive, low-cost basis Bitcoin on their balance sheets.
Yeah.
We also do some like prime lending, what I describe as prime lending, but like Bitcoin denominated loans to like market makers who want liquidity. We want to do less of that, or we do less of that because we are having to underrate credit risk.
Right. Yeah.
In that situation. Like if we have an unsecure, an open term, or even a 1 year loan outstanding, if that borrower or counterparty defaults, then like what our credit team spends their time doing is like negotiating into these master lending agreements all of the covenants that protect our principal. So maybe there's like a parental guarantee, or we're the most senior outstanding debt in their cap structure, or things like that to protect our principal. Whereas the repurchase agreement that I described is great because we take no credit risk in that investment.
Right. It makes total sense. Like you said, you get the interest and the collateral up front. There's really no downside at all. You can capitalize on that opportunity, pass on the tax savings to that institution. And this is very similar to assuming the greater cost basis, like you mentioned, for people that maybe aren't necessarily interested in passing on Bitcoin to their beneficiaries. They're just interested in getting the most tax advantageous use out of their Bitcoin, which, again, you got, like you said, you could assume this greater cost basis and just use that and borrow against that and pay that at cost. And it's effectively these institutions that are doing something very, very similar. And that is how you guys generate the yield to end up paying out these life insurance. I'm curious a little bit more. I think it makes total sense from the customer perspective, what the customer journey looks like, what some of these different products looks like, both at the policyholder perspective and then also from the institutional perspective. I would anticipate that a lot more companies are going to realize this. They're going to realize not only the opportunity at a business point here, but also that Bitcoin is one of the best forms of collateral, and there are multiple opportunities at doing this more. I'm curious, like, how much traction have you guys gotten up until this point? You mentioned Northwestern Mutual is on the cap table. How many policies have you guys been able to write, and how much? This is effectively another form of a Bitcoin treasury company. Like, you're just selling different products in order to maximize your Bitcoin holdings. I was just talking earlier, BitMine in the Ethereum world went out. They bought another, I think, $450 million of ETH. They're doing things. They're going to be staking. They're going to do things to try to yield on their ETH, maximize their Ethereum holdings. MicroStrategy's going out there. They're trying to maximize their Bitcoin holdings per shareholder. This is essentially another form, but it's a more active business and a more active business model to maximize your Bitcoin holdings. How much Bitcoin do you guys have on the balance sheet today?
Yeah, so I think you made a couple of really important points there. The first, in terms of traction, like are people excited about what we're doing? I think is kind of the first question. We raised $122 million this year alone. That's brought our total funding since the beginning of 2022 to $144 million. This year, we've raised money from the likes of, I already mentioned Northwestern Mutual, but Apollo, Bain Capital, Han Ventures, Pantera, Fulgur Ventures, Framework Ventures, and a number of others. So we're really excited about that, not only because A, it's just nice to have money, dollars, or Bitcoin in the bank, but B, they're like, in our view, top tier investors in the world with great relationships and distribution channels and things like that. So they're not just capital providers to us, but they're great strategic partners as well. The reason I think that they're really excited about it is they see the vision in that life insurance is really strategically different capital in the world than most other financial institutions. So if you think about what the product that we sell today is, we are generating like 40-year liabilities. You give us capital today, and we promise whenever you die, hopefully 40, 50 years from now, to pay you out what we owe you. That gives us the ability to take much longer duration focus in terms of deploying capital.
Mm-hmm.
In the crypto world, over the last 5, 10, 15 years, everything's been about like, how do we get as rich as possible as quickly as possible? And now we're like slowing it down. We talk about being like the tortoise to the hare.
Mm-hmm.
We want to be slow, conservative. Our mandate is no principal risk. We're willing to offset some returns to maintain that conservative, because we can handle periods of low return, but what we don't want to do is put capital or principal at risk and have periods of negative return.
Right.
So there's a reason that every high rise in Manhattan is owned by a life insurance company, is because they want long duration assets, because their liabilities are long duration. So that's really different. And that allows us to be like investors and capital providers to like the most consequential businesses in the Bitcoin or the broader digital asset ecosystem going forward, which we're really excited about.
Yeah.
We're expanding internationally. That's what a lot of this fundraise has gone towards. We're launching a product specific for the Asian market by the end of this month. And that's what a lot of this capital is going towards, because as a life insurance company, as a regulated entity, we have to hold a lot of regulatory capital anytime we do any business. So if we put capital at risk, that can include selling a life insurance policy, because if we sell a life insurance policy and you get hit by a bus the next day, we owe you the full payout. So we're putting capital at risk that way, or making an investment. If we make an investment, we're putting capital at risk because that credit or that borrower could default. And every time we do that, we have to hold a little bit more of our own Bitcoin as regulatory capital. You can think of it as a buffer.
Right.
If we ever lose any money for any reason, we lose our regulatory capital before we ever lose any customer deposited funds. And that's the protection that our regulator has put into the business model. Mm-hmm. And it's true of any insurance company that's regulated in Bermuda. Because if we start to eat into that buffer, they'll just shut us down before we ever get to a point where we're losing our customers' money.
Right. And so if I buy a life insurance policy for 10 Bitcoin, and I'm planning on making a 1 Bitcoin payment every year for the next 10 years, but I get hit by a bus after I make my first payment,
you get the full 15 or 20 or whatever the promise was based on the underwriting.
And you get that on that day when you get hit by a bus. You don't get it 10 years later.
Exactly. It's just normal life insurance. So your beneficiaries of the policy would submit a claim.
Yep.
They would send in a death certificate like any other life insurance company.
Yep.
And they would get the full payout. That's exactly right.
Yeah. But you guys do actuarial math and make sure that
exactly.
things.
We're just a normal life insurance company that operates in a foreign currency that happens to be Bitcoin.
Right.
Totally. But we do everything else the exact same. And the last piece that I'll mention based on your question is we undergo all the same reporting requirements as any other life insurance carrier. So Ernst & Young is our internal auditor. Harrison Trotter prepares our external audit. Anyone that wants can go online and look at our publicly stated externally audited financials. We're excited by the end of Q1, I believe, or maybe it's like a couple of weeks after the end of Q1, we'll update our publicly listed financials to the 2025 audit. Those numbers will look pretty dramatically different from last year based on the $122 million that we raised. But that's something that's just completely different than any other crypto company that's out there. Is we have Bitcoin denominated externally audited financials that are available to anyone online.
Very, very cool. Okay, I got one last question for you. I know we're over time, so I'm gonna just make it quick. You know this guy Brian Johnson?
Yeah.
So this guy's trying not, he's like, don't die. That's his
Yeah,
whole
we love
thing.
him. We love people like that. That's great for us.
So like what he's trying not to die. Obviously, people not dying throws life insurance, actuarial science into a loop, right? Into like, how do you possibly plan what could if what he's suggesting and there is potential for people not to die in this generation of people, what would that do to the life insurance market?
So from our perspective, it's an amazing thing because we're underwriting people to die at some point, and if they die later on, it means that we've been more conservative in our underwriting assumptions than actually plays out. And I've actually spent some time talking about this too. Is the smartest people that I know are obsessed with three things. They're obsessed with Bitcoin, they're obsessed with AI, and they're obsessed with longevity. And actually, those things all play a central role in our business, interestingly enough. Because if you live longer than you expected, you might not save enough for retirement. And in our view, a protection against that is to have access to tax-free capital that appreciates faster than inflation erodes it. So buying a whole life insurance policy in Bitcoin that you can use as a source of tax-free capital during your lifetime is a protection against outliving the wealth that you've accumulated during your working years. In terms of like direct impact on the business, and this is a gross oversimplification of how life insurance works, but if we say, Robbie, you pay 10 Bitcoins a premium, we promise whenever you die to pay your beneficiaries 20, it's because based on your medical underwriting, we believe we can turn your 10 into something more than 20. But if you live 10, 15, 20, 30, 50 years longer than we expected, that's just all added profit to us because we've underwritten you to live until you're 85. But if you live to 100, we're making that conservative return for another 10, 15 years on the capital that you've given us.
Yeah, it gives you guys more time to produce a greater return.
And it allows you the ability, if Bitcoin continues to appreciate over that time, to leverage your life insurance policy to fund your lifestyle.
Yeah, makes complete sense. Danny, thanks so much for coming on, man. Guys, if you're curious about Bitcoin life insurance, which I think it makes sense from all the tax advantageous reasons, also for the yield benefits, assuming a greater cost basis, if you just want to use your Bitcoin in the most tax advantageous way, meanwhile.bm. They can go in there. They can get in contact with you, with Meanwhile, and they can start dipping their toes into Bitcoin native life insurance.
That's right. Robbie, appreciate you having me on. Thanks so much.
Yeah, would love to do it again sometime. Thanks so much, Danny.
Talk
to you soon.
See you,
man. Very, very cool. Yeah. So that was Meanwhile. Guys, I don't know about you, but I enjoy Bitcoin. I think crypto Twitter is criminally underexposed to Bitcoin. Whether it's this financial nihilism that they think they've got to hit it big, and Bitcoin has gotten too much, too big, and they don't really have the potential for returns anymore for whatever reason. Bitcoin is here to stay. You can't really say the same for a lot of other assets and altcoins in this industry. And so I think it behooves everyone to take a look at some of the strategies that Danny was talking about. Take a look at Meanwhile. Look, these guys raised, he's at 110 million. I see 82 million. They are going to be around for the long haul. Obviously, Northwestern Mutual is, and the biggest life insurance policies are taking a look at what they can do with Bitcoin. This is part of the institutional wave that we see coming in to not just Bitcoin, but DeFi as a whole. Next, we've got another team positioned for the institutional wave. We've got McBrennan, who is coming in from Project Zero. This is Solana's prime broker. So why don't we bring, we got McBrennan up in the back. Let's bring him up so we can chat about all of this. McBrennan, welcome to the show, man.
Hey, thanks for having me.
Absolutely. Well, it's your first time on the show. Would love to get a sense of, how you got here, and generally what the origin story is. Tell us a little bit about the lore behind your story and Project Zero.
Yeah, my story in a nutshell is worked in tech and finance. Um, Started, health tech company, sold that, started two trading firms, exited those, um, built MarginFi, which was like the fastest growing DeFi product in the industry in 2023, and then saw an opportunity for cross margining and like just saw a bunch of capital fragmentation with margin, and so building prime broke building a prime broker now, which is Project Zero. Yeah.
Yeah. I think the question that I just asked our last guest, he was doing a Bitcoin native life insurance company called Meanwhile. Again, with you guys, the question is always where does yield come from? And so I'm curious from your sense, you saw the fragmentation of liquidity out there. We've seen it, Ethereum, mainnet, Solana, not just fragmented by L1, but also by different strategies. And so how does a prime broker on chain help kind of bring this all together and then ultimately provide some greater yield opportunities? Let's start there.
Yeah, so DeFi is extremely multifaceted. You have lending programs, you have perp programs, et cetera, interest rate derivatives, and that resembles finance. Finance is extremely multifaceted. The problem is that we're now at the point where DeFi has hit this inflection point. There's people who are starting to win their corners of the market. They have staying power. They have unique value add to the end user. I'm thinking of teams like Aave is a good example. Drift or Camino is a good example. Hyperliquid is an example. And so if you're the average DeFi user, or actually if you're any DeFi user at all, you're probably using at least two of these venues. You probably have your money in more than one single spot. I actually don't know many DeFi users that only arrive on chain and just use Aave and call it a day. No, they have like some money on Aave, they have some money on Hyperliquid, they have a trading purpose on Drift, they have some like lending positions on Camino, etc. And so the minute you have more than one venue that you're using at the same time, you run into capital fragmentation, right? If you have $100, maybe you have $50 here, $50 here. So now a trading opportunity comes up. And what are you going to do? You can maybe borrow against your $50 here. If you don't want to liquidate that position, you can migrate your one position over to the other venue to get better borrowing. It's a nightmare. And to make matters worse, this might be a complex exposure that you've set up. Maybe you want to be delta neutral between two venues, for example. And so you're long here, you're short here, and these two, deltas are offsetting each other, which should enable you to borrow more. But neither venue knows you have an offsetting position on the other venue. And so now you need to like unwind if a trading opportunity comes up and you can't use credit effectively. And both these venues myopically view your position as extremely risky. So situations like all the above is what we're fixing.
Yeah.
So we allow you to use the venues that you love using for the reasons you're using them, but we provide you a smart risk and liquidity engine on top of that.
So my understanding of how these margin based accounts work is, and especially when we're unifying margin across multiple venues, right? Typically there has to be some liquid venue in which we can swap out of that in the case of liquidation and a margin call. And so I'm curious, how extensible is the credit universe that you guys have where I can come on? Is it any asset that I can use as collateral, or are there some limitations?
Yeah, so this is an extreme test of risk management. So when we go venue by venue, market by market, asset by asset. So if we're, Camino is a live venue in Project Zero, for example. That doesn't mean every single market and every single asset on Camino is able to be used as collateral. We have our risk engine perform an independent assessment for every single asset within every single market that we add to be zero. And this is like a really holistic risk assessment. And then we take that approach with all venues. So we need to protect the integrity of the credit that we're providing. We have our own credit pool, which has about $250 million of liquidity in it. About 100 million of that is borrowed. And so this is essentially, yes, just like an extreme test in risk management.
Got it. You seem like a pretty young guy. Like, how did you generally come into this and get exposed with a global risk management system? Was it crypto native? Did you have experience on Wall Street? What were some of the things outside of crypto that kind of gave you inspiration to build a system like this?
Yeah, so my first venture scale company was actually solving information fragmentation in health tech.
Okay.
So which is like a very similar kind of problem set. And yeah, that I built that for a year, bootstrapped with a good friend of mine from Brown, and then that got acquired. And then I had been tracking crypto assets for a while, and I'd seen this explosion in DeFi. And the problem historically with DeFi had been a lot of venues didn't have staying power, right? Like they would show up, people would use them, and then they would die. And so there's a ton of market risk associated with building any sort of universal margining system over these things, as well as smart contract risk, and then just quantitative financial risk as well. Those are like the three prongs of risk we kind of think across, and that has changed now. So in the interim, yes, built MarginFi, which is like this isolated lending venue. Helped start like Temporal, which is like a big R&D firm on Solana. Co-founded Margin Research, was like most dominant proprietary trading firm on Solana during its run. So I got a lot of experience, got a lot of financial experience, was working with risk systems pretty in depth, and saw this maturation happen where like I know Camino's going to be here tomorrow. I know Avi's going to be here tomorrow. I can start to build, and I know users are using all of these, right? And so I can start to build universal margining over this.
Got it. And so we have you guys described here as Solana's prime broker, but that's not really the case, right? You guys are leveraging some of the existing money markets on chain from different L1s. It's not just Solana.
We've started on Solana,
Okay.
and I use teams like Aave and Hyperliquid because it just have got a ton of name recognition. They're great products, and I would love to we will integrate them at some point.
Yeah.
We started on Solana for like two primary reasons. One is on the risk side. We need a fast, predictable, low fee risk engine, and Solana is really like the only L1 that can effectively give us that. And I just see a lot more opportunity on Solana. Like I think this is more formatted for what DeFi, the DeFi I envision essentially. And so I see a lot of growth there. A lot of DeFi activity is happening there. But that is not to say our risk and liquidity engine will live on Solana for the reasons mentioned for the foreseeable future. But this architecture, this framework that we've built is extremely extensible. It can go to Hyperliquid, it can go to Aave, and it will. Yeah, because there's huge sources of collateral in these venues.
Yeah, it makes sense that this product is going to flow to where the liquidity is, and it exists on all of these chains. And so we can unify that across all these chains. It's inevitable, but you got to start somewhere. We've also seen this, just zooming out a little bit and thinking a little bit more about these on-chain apps. We've seen a maturation in this process as well. And I think this is as a result of not only institutions coming on board, but also the maturation of wallet and the browser of these apps becoming a little bit more abstracted from the base level protocol. And what I mean is we've had conversations here where we talk about what the new interface is going to look like. And it seems to be that these neobanks are taking off. It's either traditional banks that are upgrading their infrastructure. We're seeing Western Union go and launch stable coins. Revolut is getting involved in this world. Generally, these banks are building out more of their online presence, more of their digital native banking services. And we're also seeing crypto native companies launch their version of these financial super apps, these neobanks. And so I could very easily see how these neobanks become this convergence point of which you can access all of these different on-chain applications. Even if you go to Coinbase today, they let you integrate Morpho. And so we're going to want to pull in all of these different margin accounts from these different venues into one of these neobanks. Have you guys thought about how the discoverability of these venues is going to work in the near future? Are you thinking about, building your own super app, or how you think your customers are going to discover Project Zero? Do you think is it going to be going directly to the URL, going directly to the app, or do you think you're going to end up seeing more customers come in through some of these distribution channels?
It's a good question. I'm very focused on like two archetypes of immediate users, and these are two user sets that get a lot of benefit from us right now. User archetype A is yield farmers, which are like just DeFi power users. And the reason for that is yield farmers are inherently using multiple venues, right?
Right.
They have their money across a bunch of different spots. But when a trading opportunity comes up or when they have some sort of credit need, they run into huge fragmentation issues. If they need to borrow, that's a nightmare for them. So this is like a very passive, larger DeFi TAM, but like DeFi as a whole is still a smaller user base, user segment that gets a lot of benefit out of P0. And then the other archetype B is people who are running interest rate trades, carry
Yeah.
trades, and basis trades. So for the first time ever, you now can collateralize a position on like Camino and borrow against that natively on P0. So that means if like Camino has like a 7% rate for an asset and you can borrow that asset or an asset with a similar market beta profile at like 5% on P0, you're now capturing a 2% delta.
All right.
And that has never been possible in DeFi before in a generalized sense. And so that user archetype as well is getting like a ton of benefit out of this product. And this is where we're initially focused right now.
Mm.
Now, as new venues come on chain, yes, we're going to prioritize them in order of user demand. And so, as these two user archetypes want this, and also, increasingly as new user archetypes emerge, we'll be really receptive to that. But I'm going at this from like user first, like sort of the demand side rather than the supply side. And that allows us to, really fine tune the product. The product's still young, the product was launched in September,
Mhm.
but that's allowed us to like really fine tune this product to these users' demand, the needs of these users, and then we can just expand the scope and the coverage of the product in terms of the different venues that the user is using, which I think will, to your point, be increasingly these like neobanks and wallets that resemble neobanks essentially.
Right. How much traction have you guys seen since September, since the launch?
Yeah, I mean, since September, we've been one of, if not at times, like the fastest growing DeFi product on Solana. We've had incredible growth. Like we were averaging up until this very recent deleverage point, over $1 million a day in deposits and borrows. And borrows were growing initially at a slightly faster clip than lending was, which was just like a really good indication of demand.
Yeah. Yeah.
And this is with only 2 venues and I think 4 markets live, which is Camino and P0. So we're about to go live with Drift. We're
Mm.
about to go live with Jupiter. Soon after, we'll go live with Jupiter Lend. This will exponentially, not linearly, like quite
Right.
literally exponentially increase the opportunity capture on the platform. And
Mhm.
I know we have a lot of users waiting for these Drift and Jupiter Lend integrations. And so, yeah, I've been very happy with our rollout thus far.
Yeah, there's a very clear connection between solving some of these engineering product features, like adding new markets and expanding your TAM. It's not like you're going out there and having to do education. Everyone knows that they want this. Everyone knows what it is. It's just a matter of doing the engineering work to safely add these markets, and increase the addressable assets that you can use as collateral. That makes complete sense. I want to get your take on something that might be happening off chain now, but I anticipate will come on chain. I'm curious about your perspective because you brought up the basis trade. And my understanding is that right now, a lot of this is happening between the more regulated markets. You see things like the ETFs. And look, we know these have tremendous flows, both inflows and outflows. BlackRock said that this was their #1 revenue producing vehicle the entire year. It came from their Bitcoin ETF. And crypto ETFs in general have been their largest revenue producing product. And so we know that a lot of flows are coming into these ETF vehicles. And my understanding is that a lot of those are buying the ETF and then using that as collateral to sell future on CME and just capture the basis between those assets. And so, they're getting paid this basis trade. I had a conversation last week, and it was around Galaxy's acquisition of Alluvial, and how they anticipate that these staking ETFs could come live, particularly for ETH, but eventually for Solana as well, and maybe down the line from there. And that would provide even greater basis, because then you have a staking yield that you can use as part of the basis trade as well. How are you perceiving the basis trade from someone who's looking at this and looking at the flows and understanding the basis trade at a very deep level? How much validity and substance do you think is attributable to the basis trade? And then eventually, if you think it's a really significant part of the flows in this asset class, how do you anticipate that coming on chain?
Yeah, I think the basis trade is like a very legitimate and one of the strongest trades currently in crypto. I'm very familiar with the Solana, um, a, a bunch of different Solana basis trades in particular. One one really fascinating, thing that's just emerged is, Solana has a staking rate. People want to capture the staking rate, and that creates these like distortions in the market essentially. And so, um, a good example of this is across any sort of permissionless lending market, the borrow rate of Solana should be essentially at parity with the staking rate of Solana, because if not, you have this opportunity. And crypto assets, like, in traditional finance, we always had the risk-free rate. And crypto assets kind of bring their own embedded rate. I won't call it a risk-free rate, but it's essentially, with Sol, it's the staking rate. With ETH, it's also the staking rate.
Right.
Bitcoin natively doesn't have one. Like these basis trades and carry trades that are being done with Bitcoin right now are sort of a creation of at a large scale, this premium that uh yes, any sort of derivatives can provide, like you mentioned with futures, but also, like the whole uh strategy, like this premium to like this business that exists off chain with like some additional revenues attached to it, and the ability to now actually use full portfolio margining with your Bitcoin allocation. Like the reason a lot of people want to hold Bitcoin with strategy, right, is because they have a ton of stocks and a ton of commodities. And if they were to hold that Bitcoin on Bitcoin, or if they were hold it wrapped on Solana, they would lose that cross margining that they've grown used to with their portfolios. In order to have cross margining capability, they wrap it in, in this case, strategies, Bitcoin product, and now their broker, recognizes that this is a source of collateral. So this is like very much, maybe you've like given me a layup here, but this is like kind of exactly why this product is so important, right? Like we're doing this on chain. Um, and if we can start to unify these bits and pieces off chain, uh, we would solve like these weird distortions that are being created in the market simply because of margining. Yeah.
Yeah. Okay. Um, well, it's good. You recognize layups, game recognized game. Um,
Yeah.
there's two pieces here. One is I'd like to understand a little bit more about how you think about Solana's basis trade, because it is quite a bit different from Bitcoin's basis trade, as you're talking about. And I think Solana's is a little bit more indicative of how we should think about an L1, specifically. Like I don't want to. Solana's not proof of stake, but it has a staking rate, right? So like how we should think about staking rates as part of an L1 basis trade, and how that could differ from a Bitcoin basis trade as we see it play out.
Yeah, there's quite a bit with staking rates. So Solana has inflation, and then it has like network revenue, and then it
Right.
has MEV, and all three of these are pretty important, distinct things. Inflation, in and of itself, is in perfect world is like not even a cost on the underlying token. Like if everyone just staked their soul, inflation would not be a cost. But everyone doesn't stake their soul, and especially now as we have more and more traditional finance exposure to Sol, and people want exposure to Sol, they're holding these in these custodied accounts and these off-chain accounts, and it's actually like much messier to stake it. And when they do stake it, there's these layers of fee capture that happen, so that at the end staking rate they're getting, maybe when they could be getting 7% with MEV as well, they're getting like 4%, which is quite drastic at these larger scales. So that starts to open up this weird basis trade where people with access to the validators and people with access to the MEV, the inflation rate, and also the opportunities afforded by having Sol and seeing, block or being able to do block ordering, essentially have a much higher rate than people who are just passively staking, especially if they're passively staking through these off-chain custody providers, and all these layers of fee capture are happening. So that is essentially just allowing sophisticated individuals to benefit off of less sophisticated individuals, as well as just, again, people that are kind of stuck in this reg capture land
Right.
that has immediately evolved. I think that part gets better if the Solana staking rate decreases, because it just sort of like reduces the delta that people are missing out on. And
Mhm.
I think I'm very bullish on this happening. A friend of mine, Mert, recently, advocated for a proposal written by someone on his team, the Helios team, for a decrease in native Sol inflation, and I think that will just do a lot of good things at this off-chain layer, where again we're just allowing like really sophisticated individuals to run, sort of capture the full extent of this arb. Um, Now, yeah, then there's the whole MEV side. So one thing
Well,
we've
just
like
before
natively
before we
enabled
get
that,
to the Mev
yeah,
side, real
go
quick,
ahead.
just you're 100% right, and we've seen this happen on several L1s. It's not just Solana. We're all talking about decreasing the staking rate, and the reason is you wouldn't see stakers drop off too much. This is stake that inflation that is getting captured by a very small group of actors. It's not getting passed back. It's
Yeah,
not really helping secure the network. Hyperliquid,
yeah,
Celestia, Solana, they're all across the board. And we had conversations with Hasib, Tarun, and they talk about how we're just paying the validators because of this, validator cabal. And for some reason, we kind of threw a dart and we said, yeah, 8%, 10% inflation is
right,
where we need to be. In reality,
yeah.
the staking rate can come to a much more reasonable conclusion as far as what is necessary to secure the network.
I
And
fully agree.
and
Yeah.
and so I didn't mean to cut you off there. MEV is another important part of this equation.
Yeah. So there's inflation, and then there's MEV. And one thing we actually pioneered recently, which I think we're still one of the only teams in crypto to have done this, is we enabled native stake as a collateral option on one of our products at P0, and we're actually about to bring it to P0 itself. It's live right now on the Margin 5 product, but it'll be live soon with like additional functionality on the Project Zero product. And so this is really cool, because what this allows is for validator operators who are staking to their validator and also capturing the full extent of MEV, agnostic of whatever fee capture they're charging on their validator. It allows them to now post that as collateral, and be able to borrow Sol against that. So that means if, with inflation plus MEV, they're getting, 7.5%, any borrow rate that is less than 7.5% affords them an opportunity. And we see people doing this on the native side. There's a ton of people doing this on the LST side, because these LSTs like really nicely package a lot of this MEV. A lot of validator operators pass on 100% of their MEV to LST holders, and so that is why you constantly see the sold borrow rate at or slightly below the staking rate, and like that'll continue to exist unless some other better rate sort of supersedes that. But I just don't see that. Like staking on Solana is one of the most secure things you can do. The problem is it just like cuts you off from all the things that are afforded to you with DeFi. And so
Right.
like LSTs fix that, this native stake product fix that. And that's like a critical component of just Solana DeFi use in general.
Yeah, makes sense. The last thing I wanted to ask you about, McBrennan, is kind of just bring this back full circle to the beginning of this basis trade, which mostly happens off chain right now. Like you mentioned, cross margin is a really important piece of this, and you guys are starting on Solana. I'd imagine first you're going to move into some of the L1s. You mentioned Aave, you mentioned Hyperliquid. This is a very reasonable place to start, but eventually I could see a world where you incorporate some of these off-chain venues and you can have
Yeah.
Camino LP positions right next to your ETFs, staking ETFs, and some of these different positions. What is the roadmap and the path to get there?
I think that's 100% possible.
Is it
What
regulatory? Is it engineering? What are some of the roadblocks to really unify? Because we've been saying it, TradFi and DeFi, the line is getting blurred. This is just finance now, but we still need, the tools to combine these two worlds.
Yeah. Yeah. The it's possible. The main hurdle would definitely be engineering first, and solving for any sort of regulatory second. Um, the reason that we built P0 fully on chain and permissionless is for like a lot of the reasons that makes DeFi like so cool. You can audit solvency immediately. So, when you think of prime broker, like think of like Genesis, right? Like ran into a bunch of issues. Just think about the whole bad debt contagion cycle that happened post FTX. That hit a lot of prime brokers, and no one knew what was going on. And actually, a lot of what you saw during that is people moving their money on chain and depositing it into like Aave, because they knew they could check the solvency of that program, and exactly every asset that was used as collateral and all the risk configurations were on chain. The same reason, that's why we're building P0 on chain as well, so you can always audit its solvency. You can see the risk on chain. The code is open source. We can't hide, and so that is like that's the next step we've made. And so what we would need for an effective off-chain integration, if you want to collateralize your like Apple stock that you're holding in a Fidelity account, for example, in order to borrow Bitcoin natively on chain, is we would sort of need to adapt that. We need to build some sort of blockchain resembling layer where you can then post those assets as collateral. There is, if we need to, if you then borrow Bitcoin against that Apple stock, and Apple stock falls and we need to liquidate your account, like we need to have like permissionless liquidation. If we have that transparency, that auditability, that verifiability, that is what makes DeFi products so cool, and the reason we built P0 on chain, and we're like the first prime broker to do this. If we can introduce software that enables that for off-chain assets, the problem is solved, and it becomes essentially engineering and integration, and working on that integration, and adapting our risk model to that. So I think this is 100% possible. I'd love to see it happen, and hopefully it will happen, because this is a better model than the models of the past.
Yeah, makes perfect sense. And the way Larry Fink is talking about tokenization, it may happen sooner rather than later. Yeah, McBrennan, thank you so much for coming on, man. Really appreciate it. And I think you guys are building in the right direction. Congrats on all the success so far. Just had the launch in September, and you guys are already seeing awesome traction. So I'm really excited to see you guys continue to expand. And thanks so much for coming on.
Thanks for having me. Really appreciate it.
Yeah, absolutely. See you next time. All right. Next up, we're going to keep things moving. Yeah, this is a really, really awesome product, especially as, we're continuing to see centralized exchanges like, get more involved in DeFi lending. Coinbase gives you access to Morpho directly. They just give you a little pop-up, a disclaimer. I can imagine, we end up seeing, look, you can buy ETFs through, Bitcoin ETFs through Vanguard now. You can, start to custody crypto assets in regulated banks. These are setting the building blocks for an industry that is going to be built on top of it. And both of the guests that we've had so far, we had Danny talk about Bitcoin native life insurance. Then we had McBrennan come on and talk about prime brokerages on top of all these different diverse collateral types. And this is really, we're still building the tool. So imagine when things really heat up. Next up, we've got, last but certainly not least, we've got Adam, who has been around a very, very long time. I saw in his bio, he's got Counterparty in there, which I remember from the Bittrex days when I first got started back in 2016. So this one should be a fun one. I think Adam is behind the scenes now. Let's bring him up on stage and keep things rolling. Adam, how's it going, man? Good to see you.
It's going well. Yeah, good to see you too. Thanks so much for having me on.
Yeah, absolutely. And so I know you've got a couple of things going on. You've got Counterparty, but then you've also you've also got meta protocols and kind of everything that you're working on now at Contour. And so I'd like to hear kind of like how you're balancing these two things. But first, I mean, Counterparty is one of the true OGs. I remember this was part of the whole proof of work Cambrian explosion that happened, back in like 2014 to 2016, when we saw, just multiple networks kind of blossom after a result of Bitcoin success. I'm curious about your origin story. How did you originally get involved in Bitcoin, but then ultimately get involved in Counterparty and, kind of take this industry by the horns?
Yeah, it's an interesting history. I was sort of like watching the Bitcoin space back a few years before that, even like 2011, 2012, and then into 2013, a lot of ideas started like just sort of percolating in the space. People were just sharing these ideas. They were speculating what we could do with blockchain technology, sort of beyond using it for tokens and payments. And there were, Bitcoin Talk was really the forum where a lot of this stuff happened. There was a lot of like general discussion, and people were especially interested in using blockchain technology for building decentralized exchanges. No one had built one yet. This was after like Mt. Gox went under, right? And using them for financial derivatives. I remember a post by Vitalik Buterin, I think it was 2013, on how to do contracts for difference, and as a simple generic financial derivative protocol. And no one really knew how to build these or knew what they were, the place to do it. And in particular, there was a project created at the end of 2013 called Mastercoin, which described sort of how to build a meta protocol for general smart contracts. Actually, the idea for a meta protocol, I just learned recently, went back even further to 2010, when Hal Finney described embedding data inside Bitcoin scripts, then parsing it out deterministically. But the first person who revived the idea was this guy, J.R. Willett. And they didn't actually build anything for a long time. And I, among others, got a little frustrated that they weren't actually building anything, that this sort of idea was out there. And so I just sort of sat down and wrote the reference implementation for the Counterparty indexer, what's now called an indexer, at the end of 2013, and launched in January 2014.
Incredible. And so meta protocol, like you said, kind of started back then, and it's for basically this more diverse, expressive set of applications that can be done with the underlying financial primitive. You've now gone and had a long history at Counterparty, but I take it the thing that you're more focused on these days is Contour. Is that right?
Mm-hmm.
So
yeah, that's right. Yeah.
Tell us a little bit more about Contour. How does it build on this core primitive of meta protocols and help extend Bitcoin's expressivity?
Yeah, so people have been trying to, extend Bitcoin, make it better, make it faster, make it do more stuff for a long time. And there are two main philosophies of how to do it. The first is to sort of treat Bitcoin as a database and to scale it horizontally, to actually build like separate networks, side chains, roll-ups, merged mining, whatever it is, to scale the system, and then you can add additional functionality, and then you build a two-way peg. The problem with that is that a consensus system like Bitcoin is inherently self-contained, and I've always sort of favored the architectural pattern of building up, not out, and reusing the sort of all of the Bitcoin infrastructure, the Bitcoin network, the Bitcoin mining network, the Bitcoin just the whole protocol, and leaving it as it is and not trying to compete with it, but build rather on top of it, and using Bitcoin as the underlying layer. And that's sort of what meta protocols do. They can be understood as just a simple extension to the functionality of Bitcoin, as if you just added a code module onto Bitcoin Core. You just sort of said Bitcoin Core can now do more stuff. That's more or less how meta protocol works. And Counterparty used this architecture to add a lot of the first smart contracts. It had the first DEX, it had the first prediction market and oracles, it had the first trustless gaming, it had the first financial derivatives, and it had a lot of the first NFT collections, including Rare Pepes, Spells of Genesis, that kind of thing, back in 2015, 2016. And but it was very much pre-Ethereum. And so it didn't have the ability to allow users to build their own applications on top of it. The functionality, the smart contracts in Counterparty are hard-coded. They were hard-coded by sort of whatever I wrote into the protocol. So there's sort of one way to do asset issuance and one way to do prediction market. And Counterparty ended up being all of these early sort of early smart contracts, and on Bitcoin, not on another chain. And it's had a long storied history at the center of this meta protocol ecosystem. But it's also not super dynamic at this stage. It's over 10 years old, and people sort of treat Counterparty like what it is, like what it was when it was launched in 2014, and it hasn't changed a lot over the years. Like a couple features have been added, but it's largely stayed the same. It's not designed to be super extensible, and the appetite for extending it isn't very high. I came back to the Counterparty project after leaving for 8 years, now 2 years ago, and took back over the lead maintainership, brought the code base back up to snuff, fixed the tests, fixed performance, fixed some consensus problems, all this sort of just housekeeping, cleaning up, and adding some neat features, including these like trustless atomic swaps using PSPTs and so on. And all of that to say, I got re-excited about the meta protocol architecture and seeing how that can actually solve a lot of outstanding problems that there are today in the Bitcoin ecosystem still. When people are there's a lot more interest and hype around sidechains and ZK rollups, but I think that they don't actually solve the problem that needs to be solved. Contour is a new next generation meta protocol that brings a lot of really critical functionality to the Bitcoin blockchain and lets Bitcoin scale in terms of functionality in a way that hasn't really been possible before, where there are other meta protocols, ordinals, runes, and now alkanes. BRC 2.0 is in development. Those are all very limited in what they can do, and Contour is designed not to be limited, to be able to actually sort of build a full-featured ecosystem around extending Bitcoin functionality.
And so we've seen the Rollup did a whole series on Bitcoin and beyond, and we talked to all these Bitcoin L2s. We had guys from Taproot Wizards. We had a bunch of people from the Bitcoin ecosystem that were at various levels in their belief that Bitcoin should have covenants and how expressive Bitcoin should be. And so we saw Bitcoin L2s. Yeah, essentially what we concluded was that there's a spectrum, and as you get more expressive, you get further and further away from Bitcoin proper and require a bridge in order to use that expressivity. And so that kind of presents this issue where people that want Bitcoin, they want to stay on Bitcoin, maybe they want some of that expressivity, but they don't necessarily trust a bridge. And so we saw Taproot and SegWit, and we saw these things like BRCs and runes, where it really was, and like inscriptions, right, was another big thing, where a lot of times it was like it wasn't quite an exploit. It was almost like this cool, fun experimentation to see how we could use some of these soft forks or upgrades or pieces of Bitcoin script to really like explore well, what is possible in this particular segment of the Bitcoin code base. And we saw a lot of those experiments play out. But the more every time we kind of hit the ceiling, we hit capacity on how expressive the Bitcoin protocol could be. And if we wanted to be more expressive than that, we had to take a bridge somewhere else. And so, we saw a lot of these different implementations of these Bitcoin L2s. And then we kind of saw like, okay, one way to bring these two worlds together would be OP-cat. But without, concatenation and some of these pre-compiles and opcodes, it wasn't really going to be possible to bring these two worlds together. Are you saying Meta Protocol expands that core Bitcoin primitive, or would you say it's a little bit more like the Bitcoin L2? Is it somewhere in the middle? And it's kind of like this more unique thing that is sort of not on either end of this spectrum?
That's a good question. I'm here to challenge the idea that we're limited in what we can do on Bitcoin. That you need to change the opcodes, that you need to change Bitcoin in order to get all of the things that you want, that you can do it all on Bitcoin. And I think it's sort of a funny historical thing that people haven't explored this much yet. Ordinals is a good example, right? Ordinals has been incredibly popular, incredibly successful, but it's extremely limited in what it can do. It's more or less colored coins from 2012, but with, taproot inscriptions.
Right.
Cool, right? Like that's what it is, right? And there's been, the Ordinals community isn't super interested in expanding it significantly. Runes is, of course, an incremental improvement. Again, BRC 20. These are all very limited in what they're designed to do. There's no real reason to do that if you sort of design your system correctly. And I think you get the best of both worlds in terms of being on Bitcoin and all of the functionality that you would get with a sidechain or a rollup.
And so you're saying the full suite of what we've come to expect and come to know and love in this on-chain application world, prediction markets, DeFi, on AMMs and swaps, and all of these different things are possible. Not a sidechain, not a rollup, not
Correct,
using
yeah.
a Bitcoin bridge, but natively on Bitcoin.
Correct, very much, yeah.
This is a fascinating concept because a lot of people have tried to do this. What was the core innovation? Did you invent some and all without changing the Bitcoin script? How is this possible?
It honestly, it hasn't been that hard. People haven't explored the space. There's been a huge amount of energy and development. Just resources poured into sidechains, into rollups, into altcoins, in terms of all of these different technologies, into Lightning. There's been relatively little, much less investment and effort put into expanding meta protocols because people have this idea in their head that Bitcoin is fundamentally limited, that people don't want to do these things on Bitcoin, that Bitcoin is just for payments, right? And they're sort of the answer is staring them right in the face when you look at what Counterparty was able to do in 2014, the popularity of ordinals. People still go around saying, why does anyone want to use Bitcoin for something other than payments, even though there are 110 million ordinals inscriptions out there, right? And that's all that the protocol can do. There's absolutely no inherent limitation on what you can do with a meta protocol. I
just want to put this example out there. I mean, just less than an hour ago, I had Danny from Meanwhile. And Meanwhile is a Bitcoin native life insurance product. So they're using Bitcoin as a store of value, as a collateral asset to provide life insurance. And it's in kind. So you put Bitcoin in, you get Bitcoin out, and they provide some tax advantageous ways of giving people yield on their Bitcoin, but ultimately preserving it, protecting it, growing it sustainably over 10, 20, 30, 40 year time horizons, like a typical life insurance product. They're doing this off chain. I think it'd be nice if they could provide the same product, but use on-chain Bitcoin rails and use custody solutions and escrow services all within the Bitcoin protocol so that we don't have to take it and put it in some written contract, and this can all be enforced by code.
I hear very often people say, I'd love to do this on Bitcoin, but there's no platform for it. I really do think we've been hamstrung by the technology that's available on Bitcoin. And again, the reason is cultural and historical. People don't expect that it's possible. They are used to seeing all of this effort go elsewhere. And there's been all this politics, resistance from the Bitcoin core developers, the just the Bitcoin maximalist movement, right, has at times been interpreted as being against any kind of innovation on Bitcoin. And this goes back to 2014. It's unfortunate. The good thing is you don't have to ask anyone for permission to build on top of Bitcoin. It's fundamentally a permissionless platform.
Right.
And I've been doing this for a long time, and it's now easier than ever to build on top of Bitcoin. And I'm very excited about what we can do with Contour to expand the space of what's possible and offer like actual mature, real platforms to people who want to build on top of Bitcoin. And without going off chain, you just don't have to do it.
Right. And so, for instance, with Contour, you could build a Bitcoin lending market, for instance, right? Aave is one of the most popular on-chain DeFi applications over on Ethereum. We're seeing lending markets pop up everywhere. People want to borrow, they want to lend. And so you're saying it's possible to build this sort of DeFi with native Bitcoin on Bitcoin with Contour.
Yeah, very much.
Very cool. And so how do you anticipate Contour working together with Counterparty, with Bitcoin? How are all these things going melding together in your mind?
Yeah, so the nice thing is that people talk a lot about interoperability, and it usually doesn't mean much because they're talking about different consensus systems. They're talking about totally different blockchain networks, and they're saying, well, if we have some kind of trust minimized bridge, then you can move an asset by whatever means to another chain. The problem is that they're not on the same blockchain.
Right.
And Counterparty and Ordinals and Contour are all on Bitcoin, and they have this native built-in perfect interoperability layer, which is Bitcoin script. So each one of those protocols can look at Bitcoin script and say that's what's happening. And you can do things like have trustless atomic swaps from a Counterparty asset to a Contour asset, right? You can chain transactions. Let's imagine you want to use the Contour storage protocol to store more data that can fit in an inscription. You can use your Bitcoin from your regular Bitcoin wallet. You can buy the Core currency. You can purchase file storage using Core. And then you can do an Ordinals inscription that references that file data in a single confirmation because you're all doing it on Bitcoin.
Okay. And so you do a lot of this with atomic swaps. For instance, like where I get hung up is the asset issuance of it, right? Because my understanding is you can't issue something like a stable coin on the Bitcoin network.
Why not? Yeah.
The Bitcoin ledger has no concept of assets outside of Bitcoin, but it has concepts of data, right? And we can fit a certain amount of data into the Bitcoin block.
It's the way that I think about meta protocols. It's just an extension to Bitcoin Core, right? It's just this extra protocol on top of it. So you're still using the Bitcoin network and you're still using the Bitcoin mining, but you're just extending script. You're just sort of able to do more things. All you have to do is write the code, and it just has to be deterministic, and you're done. And again, this has been proven out. People have been doing this since for over 10 years now.
Is there light bulb moments because even to my brain, it's like, okay, like I realize that there's L1s, there's blockchains that are out there, and part of the value proposition of those chains that you can issue assets on those things, like because they have these ERC20 standards, right? But now on Bitcoin, I've been like, I like to think I'm an open-minded person, but my mind, I find it difficult to like conceive of assets on the Bitcoin ledger that are not Bitcoin. So
that's why no one's built it before. It's because of this expectation, right? This culture around it. People think Bitcoin is limited, right? Yeah. The only way you can do something with Bitcoin is by building this other system and then having and moving your assets back and forth. It's just not the case.
Yeah. Okay. Well, what were some of the key unlocks that you had? If it's not, I'm curious, like light bulb moments or key unlocks that you discovered through your evolution in understanding the protocol that helped you realize there was more going on here.
The most interesting thing is, and it gets a little technical, is understanding a blockchain itself as what's called state machine replication.
Okay.
The idea is that you have this shared order of transactions, and then you have the state of the system derived from by reading that shared order of transactions deterministically. Right, so every Bitcoin Core instance is reading the ledger of transactions in the same way. And decoupling the ordering from the processing, in my mind, was very important because In Bitcoin, they're actually smushed together. In Bitcoin, you actually have the parties that are ordering transactions do a lot of transaction processing and validation. The miners, right? Miners aren't going to include an invalid transaction inside of a block. And that's an optimization. And understanding it as an optimization was really critical because it allowed me to sort of see how meta protocols could work by just adding another state machine, adding another deterministic process on top of Bitcoin Core, where the miners were still ordering the transactions. They were still ordering all of the meta protocol stuff. They just didn't have to do all the same level of processing. And so once you understand Bitcoin as state machine replication, as just a duplicate, like a network of deterministic programs reading from a ledger of transactions, then you can just add more state machines on top of it, and you can do whatever you want.
And when we're thinking about the Bitcoin miners and they're processing and ordering transactions, are they not just processing and ordering Bitcoin transactions? You're saying they have the same miners, the same Bitcoin miners have the capacity to process and order assets that are not Bitcoin.
So every Contour transaction is a Bitcoin transaction. It's embedded within it. It's in the metadata of a Bitcoin transaction.
Okay.
And you can do neat things like you can put multiple Contour transactions inside of one Bitcoin transaction, but ultimately there's always a Bitcoin transaction. And so the miners are still processing the transaction, but they're not processing the Contour content. They're just sort of seeing, oh, I have a Bitcoin transaction and then a bunch of stuff I don't care about. This already happens in Bitcoin. This is how ordinals works. There's data that's inside the Bitcoin transaction the miners don't care about. And there's no reason for them to care about it. As long as Bitcoin script doesn't care about it, they don't care about it, right? All they care about is getting their fees, and Bitcoin fees are based on file size, on transaction size.
Right. And so it's the Contour state machine that is processing and ordering the Contour transactions, but it's the Bitcoin miners that are ultimately settling these transactions or arriving at finality, right?
They're establishing finality.
Okay. What's the go-to-market here? Because personally, I say this a lot, but if you're on crypto Twitter and you're kind of in this new neo crypto era, and kind of not a lot of people own Bitcoin. It feels like it's been commandeered by institutions. Michael Saylor bought another $1 billion worth of Bitcoin. There's a lot of whales, institutions that are scooping it all up, right? Ossifying it and, going to use it as a store of value. But I do think that there is a subset of individual people that are looking at it and trying to get more out of it. I'm one of those people. I want to use, my Bitcoin for something. And I still think that, it has quite the value proposition. Are you trying to convince those others to rediscover Bitcoin, or are you tapping into this subset? What's the go-to-market strategy to ultimately try to bolster more of a thriving ecosystem on Contour and, by extension on Bitcoin?
Yeah, I'm one of those people too, right? I want to use Bitcoin. I think that those institutions are a mixed bag for Bitcoin, and I think that they're laggers, right? They're followers. They're not doing the innovation, right? They're waiting for people to build stuff, and they sort of have enough in just Bitcoin as it is today to buy a lot of it and build all this infrastructure around it. But they're followers, right? And they would love to have a way of improving Bitcoin on Bitcoin. They don't know how to do it. They don't, they're waiting for someone to do it, and then they'll be fast followers, as a lot of financial institutions are. I like building stuff, right? I think there's a lot to be done in the building side, and there hasn't been enough building because of this history and culture around Bitcoin, right? So I'm excited. In terms of adoption, giving functionality to users directly, whether it's smart contracts, file storage. These kinds of things are really it's enough of a value proposition.
I think we're running on time here, but my last question for you, because I mean, getting involved in 2011 is a trip. It's always fascinating. The further back you go, it feels like there's more unique and cooler stories that come as a result of that. And we've had Jeff Garzik on, we've had core developers on, and we did this whole Bitcoin Beyond thing. Do you have any crazy stories? Last thing here, just from, the good old days or, the OGs, tell us, what were some weird stories that happened way back when?
Yeah, many crazy stories. It was a strange time. It was the Wild West, right? And it felt like the Wild West. It felt like no one knew what they were doing, and you could just do stuff,
What?
right?
Yeah. What's
And
the weirdest,
yeah,
craziest, thing that you
I
remember
mean,
from like that first cycle, if you will?
working with Overstock.com and Patrick Byrne in 2014 to try and, do the first stock market on Bitcoin using Counterparty, that was a trip
Yeah.
because he's a trip, right? This is back when they were selling alpaca socks for Bitcoin and that sort of thing. I think that I guess one thing I'll say about the history of Counterparty is I'm very proud of was the burn, the proof of
Yeah.
burn. Are you familiar with
Yeah.
this?
Yeah. Yeah. I think so. It's
Yeah,
been a
so
while, but yeah.
the way we launched Counterparty was by asking we created I generated an unspendable address, a Bitcoin address
Right.
that definitely had no private key. And the way that we launched the Counterparty currency was by saying, dear random people on the internet, please send your Bitcoin to this unspendable address, destroy your Bitcoin. And when you do, it will automatically create XCP, the Counterparty currency.
Right.
And I was an anonymous person. I posted on Bitcoin Talk. I said, I built this thing. Here's the code. Now destroy your Bitcoin. And people did it. People destroyed 2,100 Bitcoins in a month.
And that's just gone.
Yeah, gone. It's sitting there in this address. You can look at it.
Right. But no one can spend it from that address.
No one can spend it. Exactly. That's a pretty weird thing, right? Like destroying that, at the time it was a couple $1 million.
Right.
And people had no reason to trust.
More than that.
Now it's a lot more than that. Exactly. I think it's one of the largest intentional destructions of money in at least in this space, possibly broader. So pretty happy about that phenomenon having occurred.
That's really freaking cool, man. Awesome. Well, yeah, I appreciate you coming on and sharing some stories from the past, and also just going back to Counterparty and rediscovering, a very important piece in Bitcoin's history. I think is noble work, and Contour as a meta protocol is also going to prove crucial here in the coming eras of Bitcoin. So keep up the good work, man. Thank you for coming on. Would love to catch up as Contour gets more and more developed.
Yeah, sounds good. I really appreciate it.
Awesome. We'll see you soon.
Bye.
Thanks, Adam.
Yeah.
All right. That was Adam from Contour. Guys, we're going to take a quick commercial break, and then we'll be back with our next guest. You guys know him. You guys love him. Maybe we don't even need a quick commercial break. If we're ready behind the scenes, then we can get going. Pretty fun guests today. Let's get going here. Oh, there he is. You guys are gonna like this one. Let's get the proper headline. Welcome to Rollup TV. It's Monday, December 8th. Let's get our boy up. Let's get him up, guys. Where is he? Take a guess.
Where am I?
With those sunglasses?
Where am I?
Is your shirt inside out?
No, dude, this is Arthur Hayes' shitcoiner shirt. Dude, it's fire. I was wearing the other Dream Temple one the last couple days. Yeah, it's pretty electric.
You missed an hour and a half of prime brokerage and Bitcoin native life insurance. Pretty insane things happening on chain.
Yeah, pretty insane things happening in Miami this weekend. In the last week, Basel was a success.
Tell us about it,
dude. I mean, so first of all, Miami is like all connections and like who you know, and Basel's all these different like little galleries. And so our buddy Chris from Chainlink, he's like the head of comms there, right? He got special access to the collectors lounge of the main exhibition, got to talk to people and all this stuff. So we did a couple of days of art and a couple of days of just kind of like, there really wasn't much crypto happening. Like there was a Pudgy Penguin event for a week. They had like an OpenSea thing. Jack Butcher did his NFT sale thing, which is sick. This was the Art Basel that I've never, like there's never been an Art Basel with less crypto focus.
NFTs really are good.
NFTs are dead. People don't even care. It's weird. It's really weird.
Right.
And
but outside,
no one's talking about it.
outside of crypto, there was a lot of cool things happening.
Yes. I mean, like the main venue was sick, and then the design Miami art exhibit was really cool.
I've been to Art Basel a couple times. I used to go when I was like a teenager, really. I was like 13, 14, 15, and I went like 3 or 4 years in a row. And I went with my family, and we just went to the art exhibit, right? Just going around like it was a museum, walking around. But now it's grown, and there's all these satellite events. Like you're at Design Miami, which is not, it's kind of like an offshoot from the main venue, and there's kind of like these pop-up things, right?
Oh yeah. Yeah, there's pop-ups even still going on today. There's insane DJs too. John Summit was here. Black Coffee was here. Mau P was here. Marshmallow. It's like not just art, it's art and music. The city was insane. Ubers have been such a pain. Everything's slow. It's been crazy. But like, yeah, I'd say the biggest like thing for crypto takeaway is like there was none. Like there was a couple events. Pudgy Penguins probably won again, like they usually do.
Right.
Down here.
But Andy, we didn't bring you on the stream today to talk crypto. We brought you on the stream today to understand all the things happening in Miami outside of crypto.
Dude, I gotta pull up my photos. I gotta see it.
Give me some diverse inputs. Give me some. What was the most inspiring thing you saw this week?
I mean, I met up with Stefan Diggs, and he has launched a new art brand. And he was just sitting at his exhibit by himself in the middle. And it says like a background. It's like, you know, so-and-so, whatever the brand name is by Stefan Diggs. I just walked up to him. I was like, yo, Stefan, what's good, man? You mind if I ask you about this art? He's like, yeah, man. What's up? And I was like, what inspired you to make this, collection, right? Because he has his name on it, but, who knows what his level of input was. And he's like, oh, man, there was like this, like, way these like layers come together. And, I'm really a fan of his contemporary style. And at the end of it, he was just like, yo, man, honestly, I just lay on the floor a lot. I love laying on the ground. So I just made hella floor pieces, bro. And I was like, yes, dude, yes. He finally told me the real answer. So, you gave me the runaround for 30 seconds about all this contemporary art stuff. And then he's like, yeah, man, I just love laying on the ground. So I made a bunch of dope ground pieces. I was like, all right, dude.
So like yoga mats?
And then we took a photo and I just mogged his ass. Full mogged him. People were like, yo, you should be the tight end. He was like, bro, do you play football? Mogged him. Just straight up in the Arthur Hayes Dream Temple, like no smile.
Oh my gosh.
Full tape mode. so that was sick. That was random and super fun. Kraken was running ads in Ubers. I thought that was interesting. They were the only crypto ad that I saw all week. It was a unique marketing point. Dude, but seeing Jack was amazing. Jack Butcher, they raised $111 or $114,000. What you did was you would go up to the counter, you'd pay, like tap to pay for like $10, $100, whatever your donation was. I'm sure people did a ton. And then basically you get this receipt that has a seed phrase on the bottom, and it's got this soulbound token attached to it. So you get like a wallet created for yourself with this soulbound token.
I saw you holding up a receipt. It looked like you purchased some one of a kind piece of art.
Yeah, like everyone, it's a philanthropy thing. I'm pretty sure it's either a donation to Jack and he's gonna donate it, or I don't know if he keeps it, or I don't exactly know how it works. But I was literally there on Sunday yesterday at like the last hour, 4:30. He was so cooked. Jalil is Dev, the guy who created all the Opepin like mechanics to do the burn and to do the reveals and the collections and everything. Jalil's standing there in a terminal on his MacBook, like looking like he had just ran a marathon for the last 3 days, and is just straight like grinding on the GitHub and on terminal to like fix people's, like he's like checking the receipts. He's just like, bro, is mania mode. Bro is locked in. It was hilarious.
Coding from the Art Basel exhibition.
Dude, straight up standing up, just ripping code.
Standing up, ripping code in the Art Basel exhibition floor.
Ripping. And then, I mean, we walked around a ton. Art Basel main was cool. But the design Miami was definitely the best.
What's your art style? Like any particular type of, I don't know if you saw, but I got Nighthawks. This one's cool. This one's Edward Hopper. They're like staying in the cool thing about this one is like they're in a restaurant. Oh, did we lose him? Oh, we went solo shot there. So the cool thing about Edward Hopper here is that it's called Nighthawks, and everyone's got like their own personality in here, but there's no door outside. And so you kind of get the sense that like these guys, you kind of like you're like a fly on the wall and you're looking into their bubble. This is kind of like a family piece. That was my aunt's call that guy the wise man, old bald Chinese guy. So like, you know, generally
Yeah,
like
yeah,
cool,
no, I
like
feel you. I'm gonna send some to the guys in the back. Hopefully they can throw it up in the middle of the screen, show you guys some of my favorite pieces from the week.
yeah, that would be awesome.
It might just take a quick sec, but basically, like I found myself going to the Design Miami first, and then finding pieces on the wall that weren't 3D, and then just literally staring at them for like 10 minutes. And it is insane how when you stare at these super abstract pieces, more gets revealed to you over time. I know it sounds silly,
No,
but
the depth. Like the longer that you look at it, the more that you notice. You become more
oh,
observational.
dude, yeah, like all these different pieces kind of come about as you're looking at it. It's like, oh, you know, you see the one thing, and so like that kind of vibe I thought was like some of my favorite.
Okay.
There's a couple of crazy political ones I'm gonna show.
Yeah, send them in the chat, and we'll get them
Sure.
loaded up here.
But yeah, man, I mean, we had a really fun time.
That's awesome.
Really, really cool and great weather. It was so bummy in Tampa this past weekend. It was rainy and cloudy and crappy, and it's been so nice here. So yeah, we'll pull some up.
Can we get those on screen?
I found that the 3D design Miami like kind of setup was far more sick and like far more of a vibe than the single like the 2D Art Basel main exhibit.
Right.
But like I think, I mean, you know, it's all great, but the 3D like kind of like, because like you're like looking at, you know, what could be somebody's living room, and it's the most insane furniture setup ever. Yeah.
And so because I've been to Art Basel, right? I've seen the 2D paintings on the wall, but like you're saying, like the art installations, when it's more like interior design, furniture pieces, like you're saying, it's like you're walking into someone's living room and you get inspired because you're like, this could be my living room. I could set this up, and it's more interactive that way because you can kind of see yourself in here. Whereas you're just, if it's a painting on the wall, you're just kind of noticing things about it. You're not really putting yourself into it.
100%. Yeah, I mean, I thought, yeah, it was cool. Last night we ended up going to like a really chill kind of like sound room is what they call them, and it's like these it's kind of like an underground like kind of like club vibe, but it's not like a club. It's more of like they have the best speakers set up in the entire like city, a place called Jolene, I think, and basically you can feel the sound and hear it, and it's like this very like it's just a very comprehensive experience. Like people just go there just for the sound system, and so that was cool. I've never been to like a sound bar or like a sound track, but yeah, that was cool. It was like a sound bar. It was like full on like people go there to listen to specific artists and specific people because of how sick the stadium is, or sorry, the sound is, like the sound system is. So.
And so it's like music. It's certain like music artists that you'll go and you'll listen because it's a very unique sound that you get.
Like even if you put the best Bose headphones on Spotify, it's not
right.
The sound at this club is going to just be so much better.
While we work on getting these up, tell me about Beeple. Oh, here we go. Okay.
Dude, Beeple was so funny, man.
Yeah.
I put a video up of Beeple. Basically what happened is he had like, you know, Mark Zuckerberg's head on the electric dogs, like those like robot dogs. So he had like Zuck, he had like Trump, he had Kim Jong-un, he had like Altman or something, and a couple others. And then at some point Kim Jong-un fell over, and then the robot dog was just like smashing, and trying to get up, and he like ended up going and like taking a flick with it. And then one of the curators, like the you know, service providers who worked there, he came up, grabbed the robot dog, and people was just like, just get it out of here, it's fine, like it's all good. And it was just like so iconic. This guy's just carrying out Kim Jong-un, and he's like showing the crowd, and it's like North Korean guy, and he's just carrying him out of the setup,
like out of the global geopolitical landscape.
Exactly,
Like,
but it was like
carried out
metaphorically out of like this little like 10 by 10 square.
Yeah,
but it was like he exited the global
got deleted.
border, you know. just like North Korea is in the freaking
Yeah. So
setup.
tell us what
So yeah,
goes
this
through your
piece
mind
right here is this. I mean, yeah. So yeah, this piece is okay. So okay. So yeah, this is one of the first ones that I saw of the weekend. This one I just kept looking at because more things kept coming. Like at first I saw the face on the left, and then I saw a more, and then I realized there was more faces and kind of like things in the top left, and then I saw all these strings linking together, and then like the feet, and then like there's an upside down foot and a hand. And so what goes through my mind in this is honestly like I don't even know. It's just yeah. It was more of like I appreciated the taste in the work. It was a bit of an older piece, I believe. Actually, maybe it was just a couple years old. So it doesn't have like that new art style yet. That is kind of there's like this new painting style that we saw from 2025 pieces and beyond. I think it's from AI, but it literally looks like a Google Gemini 3 Pro generated image, but it's paint. So this new like metallic type of paint. Anyway, so this didn't have that, but I don't know. This just gives me like very calm, interesting colors, and like this person's mind was like clearly in a space of abstract reality and somehow ended up on this. Like I ought to think that they didn't sketch this out.
Right.
Like I ought to think that maybe they did and then they painted it, but I ought to think they just took a pen and a paper or a paintbrush and just kind of started.
They probably took some complete concept and unbundled it. Right? That's what some inspiration. Yeah, it's kind of like an exploded view of different concepts, different body parts, different mental like figures. And they've also done that with colors as well. And so it's a very modular piece. It takes something, they totally unbundle it.
And it was like a cool like fabric as well. I thought it was pretty cool. It was like a cool like I don't know. It wasn't like it was like a kind of like a vinyl almost, but it was more of like yarn type of feel. I don't know. It was almost like a rug type of feel.
Imagine
so
that would be a cool.
So that was that one. That one I took a photo of. Thought it was cool.
Got a few more here.
Yeah, we'll put the next one up. There's a couple of them. But yeah, honestly, I was a bit like let down by the lack of crypto presence. Like I put out a tweet. I was like, "Yo, who's around?" And it's hardly anyone around. It's weird.
Yeah,
it's almost like this because there was no Bitcoin Miami this week, right? Usually there's Bitcoin Miami at this time, but they did it in Abu Dhabi this year. I think that's what happens. Like some Bitcoin conferences in Abu Dhabi right now, not in Miami, and so there wasn't really much of a showing. Of crypto people. Yeah, right.
Miami's still cool, man. I mean, sometimes it's good to get out of the niche, like get out, because it's like we want to bring some of the culture. Like, if you just get, and we see it on crypto Twitter all the time, man. It's just so cynical, right? And people are just, they're too wrapped up in like the prices. And when you look outside, you can kind of get a sense of like all of these other things that are happening that we can bring into the industry. And I find that, particularly exciting, where we can go and we can get a sense of like, what are some of these people thinking? Like how are people viewing the world?
Rejuvenated lust for life, but also just like, oh, there's levels to the economic stature. There's so many nice cars here. There's so many nice things here. But then there's also like, oh, there's the different types of people who don't even really give a shit about crypto, don't even think about finance. They care about art. And it's like, oh, like those people have a completely different approach to the world, approach to their life. And so that was like a unique, just like, because you don't get around that much. We're stuck with, really smart investors, institutions, CEOs, devs, builders, and the group of speculators. And there's a much bigger world out there. Also, the art speculation market was huge. Shout out to this guy. What's going on, man? What's up, man? All good? Hell yeah, brother.
Yeah, so
I'm staying at a great hotel. I think we're the youngest people here by like 25 years.
It's a new generation, brother.
Happy Hanukkah, baby. Happy fucking Hanukkah. Shout out to Rob. So yeah, I mean, there's no
so did you see anyone?
calculated approach.
Because they're selling a lot of this is exhibits. You have artists coming from around the world. They're looking to sell these pieces.
I mean, I talked to them. There was prices anywhere from 30, 40K for like smaller ones all the way up. I think we got our highest quote was like about 90 to 110
million.
And you know, we would 90 to 110K. We didn't get any huge quotes because I mean, I'm sure there were some, 7-figure pieces out there. But you know, we asked them, we asked a couple of the exhibits like, hey, did you guys sell out? And they were like, yeah, we sold out.
Very
all
cool.
6 of them. We got lucky this year. So I would assume, and you know, my friends and I here, we guesstimated that over half of the pieces sold, like in general. But there's a whole dynamic happening where the galleries get so much of the money and the artists don't actually get paid. And it's really weird. I don't know exactly how it works. I didn't dig into it too much, but I kept overhearing it and people were okay. So that was kind of annoying. I think the screen just came up with a new piece. This one I stared at for like 15 minutes.
Okay. Tell us why.
Oh my gosh. I mean,
take us through the train of thought, right? What is your first impression? And then generally as you see more, right? Take us into your mind as you develop a more refined view of this piece.
Yeah. I wish I was more of an aristocratic art enjoyer, but I'll do my best here.
Okay.
So I walk up to it and I'm like, first of all, I'm immediately like, all right, I'm going to stand back far away, like, you know, not in front of it, like a good 10 feet behind it to get the full picture. And I look at it and I see like veins. I see like a heart, like squid, like these and then I see like these orange and white kind of yarn. I was like traffic cones. And then I just start going and the piece just takes you for a ride because like you'll follow one of the lines. So I started just following lines and then you see that the piece would connect to another part and then your eye would switch off and then you would see it go for its own journey across the entire kind of, I would name this piece Tangled, like the movie Tangled. Maybe not the best example, but that's kind of the vibe. Is like I was just getting, you'd go and then you'd come back and then you'd hop on another like part of the structure and then you'd go for another journey and then you'd come out and each time you'd see different things. And I don't know, I thought it would be a sick, I think it's a rug. It's like a rug
tapestry.
Kind of tapestry. Yeah, exactly. So yeah, this one was sick.
Yeah, this is
It's
very
probably my
cool.
favorite one, honestly.
You also get a sense, I mean, I'm sure being there too, you get an even better sense of the texture. And so like you're saying, you go into these different journeys and it's like a roller coaster and it's taking you through and you're going into these ventricles and through these tubes and each one, it's like one feels cozy. One feels more like fast. Other ones are more soft and you just get a very diverse sense of this. And it's, if you want to go philosophical, it's like life is a big journey, but it's full of like very different sub journeys, and all of those different twists and turns all have their own contours, all have their different feelings.
They're all different.
Yeah, but ultimately they make up this one big structural and this one big journey that we all go through. Very
super
cool.
Super based. Let's pull the next couple up. I'd like to show the Stefan Diggs photo. I think that's cool. And then maybe there's one more piece. But yeah, the activation of the other part of the brain, super bullish, man.
Yes.
Super bullish. Like, okay, I have not seen the artist side of the world for a while. I haven't, done like Art Basel for since I guess a year or two. My brain doesn't really think in this like more creative way, I guess. I mean, it does, but it's always so action oriented and it's just like very logically reasoned about.
Right.
So this was like a complete removal of that part of the brain and a complete shift. So that's why this piece was like one of my favorites, honestly.
And it's like it's like how you see something, you could see, then you can start to see it everywhere. Right. Yeah. And so, as we've been thinking more and more about the show cinematically, it's like I watch a movie and I'm like, oh, that lighting. It's like, oh, look at that vibe that they were able to orchestrate. Imagine pulling a piece of that vibe into what we do. Imagine pulling like a certain texture here. It evokes this kind of like cozy, comforting feeling. If like you're in that top left, like pink tube there, again, I don't know the texture, but it looks very soft, very comforting. You go going down a slide, right? Imagine evoking that kind of feeling in our like a particular segment or piece of the show, and you kind of start to get this inspiration that you start to see everywhere.
Yeah, man. I mean, that is the thing about the art is it just makes you feel.
Mm-hmm.
I also started thinking that things that I think I was very good at science and math in class and stuff in school and whatnot. I think in science too much and not in art enough. There's like
What, yeah.
there's a very scientific approach. There's
Right.
there's
Analytical.
a methodical approach to creating a business, creating a relationship, creating a life path, making your choices. There's a very rigid
Rational.
way to do things.
Very rational way of doing things. Yeah.
And then there's like the schmooze and the finesse and the art and the creation of just energies and feelings and forces, because it's an art. There's a originality. There's a feel behind it. There's this self-expression that comes out.
Well, you get.
That's,
I mean, you've played sports, and
yeah.
I'm sure a coach or someone has told you about the intangibles, right? Like what it means to be a leader, what it means to be a captain, like some of the things that you can't quite describe, or some of the things that you can't quite teach or coach, but
yes,
you see it in certain players and you draw it out, and the intangibles are what sometimes it brings it all together, and it's kind of like the glue.
Yes. That's exactly what I mean. It's like this, like it's not the X input, Y output.
Feelings aren't rational.
Yeah, exactly. It's not like X gets you Y, or like a change in X gets you a change in the result. It's more of like a shift in the way that you approach the craft. Like it is a craft. Like this business is a craft. Media is a craft. It's an art. Sports are an art. It's all a craft. So
right, and it's not necessarily there's one right way to do things. Like a rational person,
but the right way is the way that you express yourself, and then you have this craft, and
practicing.
Then you apply this.
Yeah,
your craft and sharpening it. So
yeah,
I'm gonna phone off. I'm about 2 hours out of flight here.
Okay, well, safe travels.
You had a good stream, bro.
Yeah, it's
See
good.
you guys tomorrow. I'm gonna be on.
Cool, very cool. I'm excited. I've got a trip coming up to New York. We're gonna do a lot of out of brain vibe expression, self-expression. Again, different part of the brain, inspiration type. And I'll be seeing things and seeing people practice art at the top of their craft. It's one thing about Art Basel is you got the best artists around the world that are there practicing their craft.
It's inspiring, man.
Go up there, see some shows, see people at the top of their game practicing.
Yes.
The best people of the craft.
Oh, there's Stefan Diggs.
All right, close us out here, Andy.
Yeah, man. I mean, I told the story. This is just epic. I mogged him full on. He's 6'2", I think is what they say, 6'3", but they always add an extra inch or two on the
depth chart.
On the depth chart. And I was like, yo, can we get a picture? I was with my buddy Chris. I was trying to get a photo. He was sitting down. I was talking to him standing up. I was trying to just get like this candid photo, like us talking. But then Chris was like, do you mind if I take a picture? And then he stood up and was like, all right. And I was like, all right, bet. This is what we're doing. And we just kind of like mogged it out. And I got the picture back and I was like, yo, I was wearing this baggy Dream Tempo shirt. Shout out Arthur Hayes. And I was just like, yo, I should be in the locker room next to him type shit. I was ready to go. Like, I was like, bro, let's go. It's a bye week. This week, I'll be at the game. Next week, let's fucking go, dude. He's got 3 chicks pregnant right now. Guy's insane. He had Cardi B at his birthday party the night before. I go see him the next day. I'm like, he's like, oh, I'm a little tired, bro. I'm like, yeah. I saw a video of Cardi B just like shaking it at his birthday party the night before in Miami. So I think that about does it for my culture of Miami. Guys, thank you for the vibes. Thanks for watching. Shout out Stefan Diggs. Hope you figure that shit out, bro. Wrap it up, guys. Talk to you soon.
Cheers, guys. Peace. Good stream.
Alrighty.